GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as satisfying as crossing off that last item on your to-do list. I'm your host, Jay Hamilton, and today we're joined by Milk Road head of research and co-owner Kyle Reidhead. Today we'll be answering two questions. Are L2s a good investment? And if so, which ones? Now, before we jump into today's show, we got a really exciting raffle happening right now. All you have to do is subscribe to our channel on whatever platform you are listening to, and you can be entered to win a whole bunch of prizes, our crypto investing masterclass, a Milk Road Pro subscription, and a mystery prize as well. Check the link in the details in the show notes and make sure you get involved. Kai, let me start off by asking a very simple question. Why should anybody care about L2s right now?
If you look at the price, probably you shouldn't. But in reality, L2s are probably the biggest stomping ground for crypto use right now, outside of Solana, which obviously is getting the most transactions out of any blockchain. L2s are really one of the fastest growing ecosystems in the space, whether you're looking at Base or Optimism, et cetera. Obviously, they all kind of have their moment. Some are growing faster than others. But either way, a lot of apps, a lot of developers, a lot of users are all moving onto layer twos over the past, year, maybe 2 years, let's say. A lot of capital has moved there. The LTV on L2s has just skyrocketed, the transactions, the users. And so outside of Solana, it's probably the most popular place to build and use crypto. And so obviously right now, that matters. And I think a lot of people are asking the question, well, if we're all using this stuff, should we invest in it?
That is a great question, which we will answer today in this episode. Kai, let's start off with, can you set a little bit of context? What are L2s? What's their purpose? And why do people use them?
Yeah, so last cycle, Ethereum got too expensive and you couldn't really use it. And so we needed either different layer one blockchains, which we're going to try to scale crypto, or we need to build blockchains that connected, rolled up a bunch of transactions and settled it over on top of an L1. So we obviously have our fast L1s like Solana and Aptos and Sui and Avalanche, et cetera, that are all trying to be the monolithic chain where they're going to do it all in one spot. Actually, Avalanche is not that, but the other three I said are. And then you have Ethereum's scaling roadmap, which is, hey, we're going to continue to keep the Ethereum layer one decentralized. As a result, it must be a bit slower, more expensive, but we'll just create other chains called layer twos, which will roll up a bunch of transactions and settle it down on the Ethereum L1. And so that's been the Ethereum's roadmap, and it has succeeded in that. And now there is something like 60 or 70 layer twos that exist today. And I think another 70 or so lined up to launch in the coming few months. And so there are a lot of L2s, and I think that scaling roadmap has shown to work. I mean, as you have on the screen here, most transactions on L2s now are sub 1 penny, which is massive and unlocks a lot of new use cases in crypto. So I'd say they're doing their job currently.
Yeah, one thing that's obviously very difficult is to know which L2s you should invest in if there is 60, 70, and then double that coming in the future. So make sure you stick around to the end because the final question today is about exactly answering that. But let's break down a little bit of the investment thesis for L2s. I would love you to take us through 3 different lenses to look at this. Let's look at the good of L2s. Let's look at the bad. Nothing's perfect. And then let's look at the ugly from an investment standpoint. So maybe start us off with the good, Kai.
Yeah, I'm going to walk us through those. And then I think after that, Jay, we'll talk about where I think this all goes in the future. Because I think what we're seeing, and this is true for a lot of things with crypto right now, the way we use crypto right now is going to change really, really big in a year, 2 years, 3 years, however long that's going to be. So the way we think about valuing these assets, the way that we currently value or measure the success of these assets, I think is going to change significantly. And so currently the good, of course, is everyone's using it, right? If you look at the metrics, you can go to Grow the Pie, you can go wherever. But in terms of users, it's just month over month, it's skyrocketing. If you look at transactions month over month, it's just skyrocketing across all L2s. I think June or July was July was our biggest month ever. August, probably we're going to surpass that again. We basically pass it every single month. And, you've got people like Coinbase, who's launching an L2, OKX and Kraken, the other 2 big exchanges are going to be launching an L2. They've already announced that. You've got big retail companies launching L2s and e-commerce companies launching L2s. You've got Time Magazine who's launching L2. You've got DeFi protocols that were apps now are moving their app to a specific app-specific L2. And so there's so much innovation happening in this space. And whether that's a general purpose L2, like you think of Optimism, Arbitrum, even Base is general purpose, or you think of more use case specific, like Immutable, which is a gaming specific L2. You don't really do much on there but gaming. And then you have app specific L2s like Time Magazine, who's got their, I think it's called Verify, where you can verify like content on the internet. So there's many different reasons one would have an L2. And I think the good right now is there's so much innovation. Competition is actually a really good thing because it means people are going to push harder to innovate and move faster. And then as we've seen from these charts, users, transactions, all these things are just going through the roof. And then costs to use these things as a user anyway, and as a developer are going down and down and down. So all the things you want to see in an ecosystem are looking pretty good in terms of these main sort of high level metrics.
Okay, so high level fundamentals on chain soaring. As you said, month over month, every chart is going basically exponential, but it's not all good in L2s. And I think everybody listening to this is probably thinking, well, yeah, the prices suck. So what's going on with the prices then?
So one other good thing, by the way, is profit. These are all working properly, which is really nice. We talk about that a lot at Milk Road. Is like we want to see protocols, applications which are building a business and doing it profitably. And right now, when you look at L2s, they are all profitable. And that's because they basically just repackage transactions. They take the gas from others and then they go and spend it over on Ethereum and they take a bit of a cut from it. So like their business model is just only works profitably. Now we'll talk more about that because I don't think that's going to continue. So on-chain profit, good thing. But the problem is the prices have not done well. Now, and I mean that since basically year to date, if you look at any of them, we are down real bad. I mean, you look at the last 30 days, the last 60 days, the last 80 days, I don't care what you look at. If you look at in 2024, the prices are down like more than 50% in basically every L2, except for the ones that just launched like a week ago and haven't been able to go down 50% just yet. So they're real bad. Now, why is that happening? I mean, first, all altcoins are down bad. So I wouldn't say this is an L2 specific thing. If you look at the crypto market cap in the since March, basically we're down, I don't know what we're down today, maybe 20, 30%, whatever it is, but we were down real bad, right? What does that say there? What are we down currently? Crypto market
37%.
We reached 37%. Yeah. So to see that L2s are down 50, 60, 70, whatever, it kind of makes sense. I mean, if you look at any altcoin, they're all down pretty much the same. Now, one of the issues with L2s who have been hit probably a little bit more than others, at least more than, let's say, DeFi protocols and things, is they suffer from what we've talked about a bunch, which is the low float, high FTV. Basically, what happened here is a bunch of these tokens launched and they only launched a small amount of their tokens. And so they have a bunch of tokens that are still kind of sitting there that are vested, which unlock on a monthly basis. And they unlock to whether it be VCs, whether it be to the team, et cetera. And so there's increased, sell pressure on these tokens as they continuously unlock. Now, this could be a bad thing. This could also be, you mentioned ugly. This is probably more in the ugly side, I would say, because there's a lot of tokens that still need to be unlocked from these L2s. And so I think that's an addition to why the prices are going so wrong for L2s currently. And also probably competition. I mean, we just talked about there's so many of them. It's like, if I want to invest in Solana because I see that the activity on Solana is doing well, I just buy Sol. But if I want to invest in L2s because I see L2s are doing good, as I just said in the good section, well, where do I go? There's like 60 tokens, So there's obviously some fragmentation there. And I think that causes some issues in the price as well.
Okay. So fundamentals strong, price bad, market bad. Where do you think this is all going in the future? You sort of tease that you don't think the profit sustains itself. If you were to look out, project the L2 ecosystem 5-10 years from now, what do you see?
So first, one other thing I guess we should touch on for the bad and or ugly, again, it could be either right along with the token unlocks, is that L2s are sort of very centralized, right? The whole goal of crypto is to build decentralized protocols. Most L2s, actually all L2s are not that. They are very centralized, whether it's controlled by Coinbase or Optimus, et cetera. Now, they are working their way of getting to become more decentralized, and I think that is key. And so we'll probably see that happen over time. Fault proofs, for example, just launched over on Optimism. And so like it's getting there, but it's definitely, we're still a long ways out from getting to that point. I think that's probably still holding back price because there's just, I don't know, there's just additional risk there than there is if you hold ETH or if you hold Sol, which are obviously a little bit more decentralized. One final thought right now and where the market's at is the L2 tokens or L2s in general are using their tokens to bootstrap their ecosystem. And so if you look at OP, for example, they have OP rewards, where if you do things on chain, they'll give you retroactive rewards, right? Every chain's doing this. Blast is doing points programs. Arbitrum gives away tokens. Like they're all giving away grants and tokens right now. And all that is just saying, hey, if you build on my ecosystem or if you use my ecosystem, I'll give you tokens. What do those people do with it? They're usually going to sell because they're getting paid to hire a team to build whatever app. And so again, these are all just really bad supply and demand factors that are put in these tokens. Now, what we need in the future is to take profit from these L2s and use that profit to buy back tokens. I think if we can figure this out, kind of like what Ethereum does in terms of their burn, then maybe these tokens are going to do much better. Once the supply dynamics get figured out and we start to use profit to buy back. We talk about this a lot with Maker and a lot of DeFi protocols who are already doing this. L2s are not there. Now, L2s, their form of profit right now is through transaction fees. So they have a higher margin on their transactions that they skim off of before they go and pay back Ethereum. I don't see this continuing long term. And the reason I say this is it's so competitive in L2s. What do you think they're competing on? Well, on cheapness, right? If you want users to come and use your chain, you want people to come and build on your chain, well, it needs to be cheap. And the best way they can do it is to keep lowering and lowering their fees. And I think we'll keep seeing this. If you look at Immutable, for example, it's free to use Immutable's chain because they just said, we're going to subsidize the cost for you. We'll pay for those fees. And apps and users, you don't have to do it at all. And I think all chains are going to go this way because it's the best way to create the best UX for users. So if we think about where things are going to go with layer 2s, there's a million of them right now. I mean, there's hundreds of them, let's call it, not a million, but maybe one day there'll be millions. So in terms of the general purpose ones anyway, I think we have power law effects where liquidity, users, apps, devs, they're all going to kind of go to one of them, maybe two of them. It looks like that's probably going to be Base. For a while, it looked like it was Arbitrum and Optimism. Now, Base is part of the OP stack. So like, we'll see what happens there. But obviously, Base has Coinbase, which has all the users, the distribution. And so I think we're going to see power laws where there's not going to be hundreds of general purpose L2s. There will probably be hundreds of like app specific ones. So like, I don't know, Amazon wants to move on chain. They're not going to use a general purpose L2. They'll just create their own L2 where they can have their own token. If they even use a token, they'll have their own functionality for their layer 2 and how their block space works, maybe their own wallet, etc. That only works in their one little ecosystem, and they'll build there. And so like those will happen. We'll probably have a ton of these. I think we'll see many businesses do this, and they'll probably do it on Ethereum. They'll also do it on Solana. Everyone thinks Solana is just going to be its own L1. It's not. They're going to have L2s as well. There's already 5 L2s on Solana. No one's talking about it, but that's going to happen more and more. So we're going to see that continue. And I think we'll see these power dynamics where the general purpose ones will collect most of the liquidity, most of the users. And I think that's probably going to be Base, but we'll see. Maybe Polygon, maybe Arbitrum. I'm not really sure. We'll see what happens there. The key reason for this, I think the underlying tech doesn't really matter anymore. There's no longer really a moat. Like back in the day, it looked like Optimism had a lead on the tech or Arbitrum had a lead on the tech, right? And now every general purpose L2 is basically the exact same. Now there are some with like, I don't know, ZK Tech and whatever, but like they'll all just end up having that. And so like there isn't much, I guess, like competition or moat around the tech side, right? And I think what happens eventually is we start to connect all these L2s where there's not much moat around the liquidity either. So let's say Optimism has, I don't know, $5 billion in LTV. Well, once we remove the fragmentation from all the L2s, that liquidity is just going to be shared across any L2. And so you don't really have a moat there either. And so I think there's 2 moats that matter. And I think those moats are, one, distribution, which we've already seen. This is why Base is doing so well. It's why Ton also is doing so well because they have the distribution from Telegram. So I think L2s, especially general purpose that have distribution or app specific, actually, like if Amazon launched one, they're going to get a shit ton of users the moment they decide to have a shit ton of users. And so distribution obviously matters here. And then the second thing I think that matters is UX. And I think where we're going to start to see L2s go is trying to control the UX from top to bottom. The best example of this, as I said already, is Immutable. The way that Immutable works is it's an L2 specific for games. They've got hundreds of games building on there, millions of users already using it. But what they've done is they've sort of made their layer 2 sort of closed. And why they did this is now they can control how the fees work. And so, as I said, there's no gas fees for games. There's no gas fees for developers. There's no gas fees for users. Immutable pays for it. But what Immutable has done in the back end is they have created an underlying marketplace, let's call it, for NFTs and for DEXs. Okay. And so every single trade that happens on Immutable goes through this underlying marketplace. And what they do is they take a fee out of the volume of every trade that happens. So again, users never need a gas fee. And so they don't need to put ETH in their wallet to play a game, okay? Which every other blockchain does this. And I don't think people understand how bad of a UX that is. Immutable's gotten rid of that, and they have a new business model. It has nothing to do with transaction fees. Instead, it's just from trading volume. That's how they make their money. And so when EIP 484 happened and lowered the fees to Ethereum, all it did was just significantly lower the expenses to Immutable, right? And now people can trade more, et cetera, and they just make more money. That's all it is. And so they also have their own wallet, where if you use this wallet, again, no gas fees, you can connect into any of these games, you can use all the different things. And so they're controlling the UX from the moment someone signs up to play a game all the way through to when they want to trade an NFT, to when they want to swap to a different token. They control the whole thing. And so it feels like you're in one ecosystem. It's like if you use, I don't know, Fortnite, or you're going to use Amazon, or you're using Facebook. Everything you do is in that platform. It feels all the same branding, all the same UX. That's what Immutable has done for gaming specifically. And I think that is a moat, right? A user right now that plays any game on Immutable, actually, let's take developers on Immutable. They can't just go and move to base because they'll lose it all, right? Everything that's in there exists with that same UX that Immutable has built. That is extremely powerful, and no other L2 has that, okay? If you look at what Blast is doing, I know a bunch of people are bearish on Blast. I'm actually extremely bullish on Blast. And the reason is they're trying to control the UX from top to bottom. They've built some amazing tech where you have native yield. They're building a wallet, a mobile app that's all done from within the same thing. And so if you go to use DeFi, you use it under the Blast brand. You don't just use, I don't know, whatever DEX is on top of Blast. So I think if you can get distribution and you can control the UX, you can find new ways to create business models in terms of an L2. And it's not necessarily about gas fees anymore. And I think, at least I hope, L2s are going to move away from charging gas fees at all, because how can you get people to start using, let's say, Base or an L2 instead of Solana? Just even though Solana has $0.001 or cent or whatever to transact on Solana, there's still friction, right? There's still the idea that when I open up my Phantom wallet, I have to put some soul in that wallet to start. That's such a barrier to entry to anyone new in the crypto space. Whereas if I can just get rid of that completely, I'm going to dominate the market. And I think Immutable has figured that out. I think we'll see more L2s starting to figure that out. So that's where I'm starting to see the L2 world go. And the reason that exists is you can't do that on the L1s. You can't do that on Solana. You can't do that on Ethereum. You have to control the functionality of your blockchain, which only exists when you build on top of a layer 1, when you build a layer 2. And so I think that's where we're going to see the world go. And I think that's going to be super bullish for the space.
Okay, so you kind of teased a few tokens that you clearly like there. But if we step back, what are the L2 tokens that you feel like are a good investment when there's 70 of them right now and 70 more coming? Feels tough to pick a winner.
Yeah, so outside of IMX, every token is a general purpose L2. And so if we think of where this world goes, right? Gas fees and on-chain profit, as you had that chart up, is probably going to go down to next to zero. It's going to go very low. I'm sure some will still have a bit of a margin, but it's going to be very, very small to what it is today. Now, that might work out in the future once there's so much volume that you can charge just the tiniest little bit above. But right now, that we don't see that. And so I think those margins get lower and lower and lower. Okay. I think liquidity gets not fragmented and moves to anywhere. So you no longer have a moat on your liquidity. And so I think it's going to be very tough to choose the token that wins on the general purpose. So this is your ARB, your OP, your Base. Well, Base doesn't have a token, but Metis, Mantle, every single L2 you think of today, I'm actually very bearish on all of them. All of them have huge token unlocks. All of them have tons of competition, and all of them have zero moat. So I actually don't think any L2 is worth investing in right now, at least on the general purpose side. The only one I do invest in, because my thesis could be wrong, and so the only one I do invest in right now that I think is probably the top of these would be Optimism. Now, the reason I say that is because they have a different business model, which is their OP stack model, which is whatever revenues Base makes or Mode or any other L2 that's in the OP stack, they pay, I think it's 10 or 15% over to Optimism. So I think there's an opportunity there that if they can be the lead general purpose blockchain, they might be able to drive revenues to their token. So that's sort of my bet on there. Am I super convinced they will? Not really. But like, obviously, there's a lot going on in the L2 space. I want some exposure to it. So OP is my main way of getting access to that. Otherwise, like, honestly, I don't see these tokens doing very well. Now, look, when we get into the banana zone, as we've talked about a million times, like every token's going to go up. If L2s catch a narrative, then like they're going to go up. But in terms of like, are they really going to outperform? I'm not sure. And so do I have strong conviction fundamentally? I don't think so, because I think the business model of L2s gets disrupted in the next year or two. So if I was to take one on the general purpose side, it's probably OP. Now, moving out of that, I start to model these things and look at them very differently. Which ones aren't looking at L2s the old way we use L2s? Which ones are building something completely different? And that's Immutable, right? I've talked a bunch about Immutable already and how their business model works. It's not on fees, it's on something different. And they actually have something that's very different than every other L2, right? They're niche in terms of gaming. They have their own tech that controls the UX from top to bottom. So they have potential to have a moat around their ecosystem. All they need is just 1 or 2 or maybe 3 games to finally work out, and they are going to crush it. Now, they have hundreds of games already committed to building on them. There's like 5 games already, at least, that are picking up traction that have like 2 to 3 million, I think, daily or monthly. I can't remember which number it is, but daily or monthly active users. So like they've got something going there. And with gaming, it takes like 1 out of 100 games is going to make it. It's going to make it real big. And if that happens, Immutable setup, because every trade that happens in every single game on Immutable, they're taking, I think it's 1% or 0.25, whatever it is, but they're taking a cut off of it all. So they just need a few games to really work out, and they make that money, and they also buy back the IMX tokens from every transaction that happens. So not only do they have a revenue mechanism that makes sense long term, so long as something works on their L2, they also have a way to drive demand to their token, which is buybacks. So they've already figured it out, in my opinion. We're just waiting for a game to take off. So IMX I've been very bullish on for a long time. One other reason I'm bullish on IMX is they don't have many token unlocks left. They launched way before most other L2s. And so most of their tokens are in full supply. I think it's something like 80 or 90% already. So there's not much left over there to be put onto supply. So to me, yeah, what's the number on there?
78%. And this 78%. Is as of like a month ago. So
right,
around 80%.
Right. So they're kind of, they're a lot farther through their maturity of their token than most other L2s. So I think that's one reason that I'm bullish there. The only other one, and I actually don't, well, I guess I do hold some of this. The only reason I hold it though is because I got the airdrop. So Blast. Blast is one where I'm not necessarily super bullish on it right now. There's a lot of token unlocks to come out. A lot of people are nervous on Blast at the moment, and it's done really poorly lately because once their airdrop released and their token was released a month or 2 ago, their stats have gone down big. So if you look at the active users on Blast, it's gone down like 70%. But I mean, this happens on every protocol, so it's not really a huge concern. What I really want to look at is like, is there anything there that exists that gives them a moat? And the one thing Blast has that no other L2 has and no other chain has is native yield. And I still think this is one of the coolest things. This is actually where I said L2s don't have any moat around their tech. Blast currently does, because they've built in something that no other L2 has, where if you hold ETH on their chain or you hold a stablecoin on their chain, it auto converts it into a native yield-bearing asset. And so basically what it does in the background is if you hold ETH, it uses Lido to give you the yield of staked ETH. If you hold, I forget what their stablecoin is,
USDB.
Maybe. USDB, yeah. It's using Maker to give you the yield from SUSD, from DAI, from Maker. And so you can create apps now that you can't create anywhere else on Blast. And I think that's really cool because you can start to use this native yield to create a business model. And so think of like predictions markets, for example, Polymarket. Yeah, you can go use Polymarket on Polygon, but if there was one on Blast, well, now you can actually earn yield while your money is sitting there in a predictions market, right? Sometimes it takes months for your prediction to play out, but you could actually be earning some income while it's in there, waiting to see if that prediction plays out or not. And that's just one example, but there's many different examples that Blast can do in terms of like an app that just can't exist anywhere else. And so to me, that builds network effects. To me, that's way more valuable than them having a lot of users right now or a lot more TVL than anyone else, because they just have something different. And they have a chance that an app will be created there that just can't be created and moved anywhere else. So when I think of who has a moat more long-term, Blast does. Absolutely Blast does. And so I know a lot of people are bearish on it, which is the best time to be buying. Maybe it's still got some more room to go down. I'm not even sure what the price is at right now. I haven't bought any of it. I didn't sell my my airdrop, and I'll just kind of see where it goes from here. But let's see what the FTV.
We're sitting at 1 cent right now
in terms of price. Yeah, but what I'm looking at is the FTV is what I want to see.
FTV is sitting at 1 billion and the market cap is 200 million.
Right. So it's fairly low. I think Arbitrum, Optimism are 1.5 or more at this point, getting close to 2 billion. So probably still has more way to go down. But I think as markets start to pick up, if Blast can show that it has some apps, just like if IMX can show that it has some games, I think this thing's going to do really well. Because just in terms of it has something different than everyone else, which everyone else is the exact same.
Kai, thank you so much for breaking that all down for us. Everybody listening, I want to know which L2 tokens you hold. Which ones are you invested in? And throw a comment in wherever you're listening on YouTube. And as I said at the beginning, if you're not already subscribed to our channel, please subscribe, because if you subscribe by the end of the month, you could win some free prizes in our raffle that's happening right now. Details in the show notes. Remember, everybody, none of this is financial advice. Investing in crypto, L2s in particular, is risky. You should only invest what you can afford to lose. Thanks so much for listening in. See you next time. Have a wicked awesome day.